Hello everyone, this is Chad Stayskull from Eagle Wealth Management. I'm here with our educational economic update for June 2017. In this month's video, I want to talk about some of the major headlines that influenced markets in May. And we hope that you can use this information to offer some insight into what these developments might mean for you as an investor. So to start off, the economy sped up a bit this spring. In April, consumer spending rose 0.4%. This is the biggest gain we've seen since December last year. Spending was also aided by rising incomes and the nice tax refund some of you got. Lower inflation was influenced by a decrease in oil prices over the last couple months. But even with the curb in inflation, the Federal Reserve sent a pretty strong message on June 1st that it plans to continue raising interest rates in June. And soon it's planning on shedding some of its $4.5 trillion in bond holdings. This is important to watch as we look at future interest rates. Experts gave little indication that the U.S. economy will reach its 3% growth this year, considering the healthcare and tax reforms are still stymied in Congress. There are expected surges in infrastructure spending. The Federal Reserve pointed to falling prices for certain final goods, including groceries, apparel, and autos, in its most recently released summary of economic conditions. Job creation surged in May due to a jump in construction positions and a boom in professional and business services. Private payroll increased by 253,000, which was ahead of expectations. Experts now predict that the unemployment rate, now at 4.4%, could be headed to 4% very soon. But even with all the uncertainty, the Dow, S&P 500, and NASDAQ were all on track to post monthly gains. The tech-heavy NASDAQ gained 2.5% in May and posted a 7-month winning streak, its longest since 2013. And Treasury yields fell steeply compared to where they began the trading year of 2017. On May 31st, the benchmark 10-year held at about 2.2%. It started the year at near 2.5. And the Chicago Board of Options Exchange, or VIX, which widely is considered the best gauge of fear in the market, traded near 10%, which means buyers don't have much fear of the markets at this time. The Consumer Confidence Index, which previously decreased in April, fell again in May. But U.S. consumers are still optimistic overall. The index now stands at 117.9 after hitting 125.6 in March, its highest level since December of 2000. Economists closely watch the mood of consumers because spending makes up about 70% of U.S. economic activity. In the coming month, we're going to be watching a lot about what happens in the second quarter. Though economists are all over the place regarding how much improvement will occur, the overall outlook is expected to improve. We will also keep close watch on how the decisions concerning the Paris Accord on climate change may affect trade with other countries. If you want more guidance on approaching your financial needs or balancing your assets and liabilities in this current environment, we're here to talk. And please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call. We're happy to talk. Well, that's it for this month's economic update. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of June 2017.